the next point we were going to go through anyway was about how the US is planning to tax ETFs, which is, for those who don't know, it's exchange traded funds, to non-US investors at 10%, which is going to start on the 1st of January next year, which is in 10 or 12 days or something like that. So, yeah, I couldn't find much information on this myself because I know it was a recent announcement, probably came out like yesterday or something, but can you explain what this new law will actually mean for investors who are outside of the US?
Yeah, so if you're investing in American ETFs, and there's only a select few of them. I know Interactive Brokers has a list of which ones. It's not all ETFs, it's only some of them. But I would say it's probably a good third, and it's the most popular ones traded. What this is America reaching its arms around as much hunt in their hunt for taxation as they can get. And the easiest way to do it, and it's not going to piss off the local US people, is go after non-citizens that are trading ETFs, right? So if you're trading ETFs, every time you sell one, 10% of your profit will go straight to a withholding tax. Nice and simple. So just be wary that if you are trading American derivatives, that it's not actually an ETF called something else, and go for it in a logical manner. Now, there is ways of getting around the 10% withholding in the US, but expect the 10% withholding to be applied to everyone non-citizen over the course of the next few years, because it's a massive pool of money that is sitting there ready to be tapped into.
What about, will the same law apply to tax-free structures? Like, for example, foundations, will there be any exemptions around that, or will it be applicable to literally everyone?
Well, see, foundations and those sort of structures are only tax-free in their own home residence, right? So if they're resident, if it's a tax-free foundation here or Liechtenstein or somewhere like that, Malta, Isle of Man, Nevis, it'll still get tax withholding in the US because it won't be a tax-free structure there. If it's a tax-free structure in the US, well, then you're a US persons for tax persons. So the US really doesn't look at other people's tax-free structures going, we don't care. That's why it's a withholding tax, right? And you'd be able to claim the offset against that anyway.
Yeah. Yeah, so I guess if you're an investor outside the US investing into US funds, then yeah, you got to be careful around that. So,
and so you won't get over relief. So I know a lot of people that actually invest into the US in a big way actually do it through US taxable entities so that they can get the rollover relief. I think it's a 1031, which is the capital gain rollover relief. So you can keep your money just going round and round and round and round in circles, and just keep the capital gains tax being kicked down the road.
Yeah, that makes sense, because yeah, there would be loopholes around it. It's just a matter of knowing the right ones.